I'll hop back in the queue. Thank you very much.
Thanks, John.
Thank you. One moment for the next question, please. Next question is coming from the line of Kevin Steinke of Barrington Research Associates. Please go ahead.
Great. Thank you. Just wanted to ask about the contract parking volume growth, 12%. This is a nice number, acceleration from 6% in the first quarter. So is there anything meaningful you'd want to highlight there in terms of the faster growth? I know you talked about both return to office as well as residential, but I don't know if there's any more color you could provide.
Yeah, I think the nice thing about that is it builds on itself through the year. So, we've been very focused on it. First quarter is always our seasonally slowest quarter. Second quarter is that return. We're seeing that return to office trend really pick up, anticipating that remaining in third quarter. And same thing with new leasing coming online and actually being leased up. So, not a surprise that it happened finally. We've been talking about it for a year, but nice to see that, it's really coming to fruition.
Okay, good. And you mentioned, I believe you mentioned that rate contributed to your same location revenue growth in the quarter. I don't know if you're able to parse that out on a consolidated basis in terms of, a percentage point contribution, or if you only look at it on kind of a asset by asset basis.
We look at it internally, asset by asset. Predominantly, the revenue expansion came from utilization growth, and that is really focused on volume first, rate second. Once you have a full garage, you have pricing power. And so we are staying extraordinarily disciplined on that to make sure that, parkers are in the door, they are happy with the product, and then they are very sticky consumers.
Okay, great. It sounded like you had an optimistic view of the second half of the year. You mentioned a strong event calendar and just the internal momentum, but any more color on kind of the visibility you see into the second half, and how do you think that's going to kind of line up for the rest of the year?
Sure. The second half of the year is always our stronger half of the year. I think what we're seeing is a higher baseline for contract parking, for transient parking, and so we're optimistic for the back half of the year.
Okay, and with the transient parking, I believe that grew in the quarter, the transient revenue. Would you just attribute that mainly to some of these, the disrupted assets coming back to utilization, when we're talking about construction, Cincinnati, Nashville, et cetera, or, any more insight on the transient side?
Yeah, it's substantially related to things coming back online, construction ending, convention center you referenced, and there was a small, very modest rate expansion as well.
Okay, thanks for taking the questions. I will turn it back over.
Thanks, Kevin.
Thank you. One moment for the next question. Our next question is coming from the line of Mark Riddick of Sidoti. Please go ahead.
Hey, good afternoon.
Hey, Mark.
So I wonder if you could talk a little bit about you've mentioned a couple of times events, and maybe you could talk a little bit about, because I guess there's some visibility there, maybe talk a little bit about what the calendar looks like, whether it's third quarter, fourth quarter weighted, and maybe the comparisons that they had there. Is that sort of more of a consumer-driven kind of area, or what is it that's giving you confidence on the event side?
Sure. I mean, third quarter is historically always the busiest. You've got a number of sports, concerts, downtown events. We've had a number of demand drivers reopen, and so that contributes. to more events and more people downtown, more hotel stays, et cetera.
Great. And then I was wondering, going back to the questions around rate and utilization, I was sort of wondering, you mentioned as far as it varies by location, and that's certainly understandable. Is there sort of a general range we should be thinking about that sort of makes the switch kind of turn to the rate side of the equation? Is there sort of a ballpark range that we should be thinking about as far as your comfort levels?
It really depends on the asset itself, and I'll give you a little bit of color. In a garage, you have a much larger asset, and it takes much more to fill it. So you might hit that stabilized point somewhere between 80 and 100%, where you're starting to push on rate. In a parking lot where you're turning it more frequently and you have people in and out several times a day, utilization there could be 300 or 400%. And yet that may not still be stabilized. So it really depends on the type of asset and then the market dynamics itself.
Okay, and then maybe you could switch around you sort of views and thoughts as to the labor side of the equation, levels as far as ability, any needs to add there given the growth of utilization. How should we be thinking about the labor side of the equation?
It shouldn't change. The great thing about parking assets, they are very fixed cost.
Great. Thank you.
Thanks, Mark.
Thank you. One moment, please, for the next question. And the next question is coming from the line of Michael Diana of Maximum Group. Please go ahead.
Okay, thank you. Transient is, I assume there's some seasonality there, like third quarter is probably big. Could you comment on any seasonality? And then also, if transient really started picking up the way you hoped it will, how significant is that? What percentage of revenue would that be?
Sure. Third quarter is always the largest quarter. It's the busiest quarter, and it's really the most dynamic from demand drivers. So, you've got all kinds of sports events, conventions, hotel stays, vacations. All these things feed into utilization. So we anticipate, that continued activity because, as we said earlier, we have a number of demand drivers that have reopened, specifically in Cincinnati, Denver, and Nashville, the construction ending there.
Right. And how big could that be? The transient category?
Yeah, I think
about 2/3 of our revenue. So it's a 2/3, 1/3 split between transient and contract.
Okay. Great. Okay. Thank you.
Thank you.
Thank you. There are no more questions in the queue. And that concludes today's programming. Thank you all for joining. You may now disconnect.